Have you noticed how much your money doesn't go as far as it used to? Whether it's a trip to the grocery store or filling up your gas tank, everything seems to be getting more expensive. What if there were ways to protect your wealth from the growing threat of inflation and even make your money work harder for you? In today's video, we're diving into 5 smart and effective strategies to protect your money from inflation in 2026. These aren't just theories. These are actionable strategies that can help safeguard your financial future. Let's get started. 1. Invest in real assets, gold and commodities. Real assets like gold and commodities act as safe havens during times of inflation. When the currency weakens, real assets, such as gold and industrial metals, typically increase in value. Gold is considered a timeless hedge against inflation, with many investors viewing it as digital gold. In recent years, gold has continued to perform well, and projections for 2026 show the price of gold could reach $4,000 to $5,000 per troy ounce. But it's not just gold that should be part of your portfolio. Industrial metals like copper and tin are essential in production of goods, and their prices tend to rise when inflation pushes the cost of materials and manufacturing upward. Commodities like these can help protect your wealth as their value is directly linked to physical resources, unlike paper assets like stocks. So when the value of the dollar drops, you still have assets that hold their worth or increase in value, allowing you to preserve your wealth during inflationary times. Another reason why commodities and gold are so appealing is their tangibility. Unlike stocks or bonds, you can physically own gold or commodities like copper, giving you a sense of security and control over your wealth. For investors, commodities offer a chance to diversify their portfolios and reduce reliance on traditional financial markets. By including real assets in your strategy, you ensure that inflation doesn't eat away at your savings, making these assets an essential part of any robust investment plan. 2. Target price-resistant sectors. When inflation strikes, it affects almost every aspect of the economy. But there are specific sectors that have built-in protections against rising costs. Sectors where companies can still thrive, even when inflation is high. These are the industries where businesses have the ability to raise prices without losing their customers. Such companies possess what we call pricing power, and this power allows them to maintain profits despite inflation. Consumer staples are an excellent example. No matter what the economy is doing, people still need to buy everyday items like food, cleaning products, and personal hygiene products. Brands like Nestle, Procter & Gamble, and Unilever are experts in this area, as they have built strong, loyal customer bases that rely on their products. These companies can pass along price increases without losing business, making them valuable assets in an inflationary environment. Healthcare is another sector with a strong ability to weather inflation. The demand for healthcare services is constant, and as the cost of living rises, healthcare providers are often able to increase prices to keep up with higher costs. Similarly, the energy sector benefits when oil and gas prices climb, which is a key driver of inflation. These sectors have been historically resilient, which is why they should be central to your investment strategy. By focusing on companies that operate in these sectors, you're positioning yourself to outpace inflation while maintaining stability in your portfolio. 3. Utilize inflation-protected securities. If you're looking for a reliable, low-risk way to protect your wealth during times of inflation, inflation-protected securities, IPS, should be a key part of your strategy. These types of investments are specifically designed to keep up with inflation by adjusting in value based on the rate of inflation. One of the most popular options in the United States is TIPS, Treasury Inflation-Protected Securities. TIPS are government-backed bonds that adjust their value according to Consumer Price Index, CPI, which is a measure of inflation. As inflation rises, the principal value of your TIPS investment also increases, ensuring that your investment grows in line with the rising cost of living. TIPS provide a unique advantage because they're directly tied to inflation. They offer a reliable hedge against the erosion of purchasing power, something that is especially crucial in times of rising prices. By holding TIPS, you ensure that your investment is protected against inflation's harmful effects, meaning your money retains its value as the cost of goods and services increases. As inflation rises, so does the value of your TIPS, creating a natural defense mechanism for your portfolio. Another great option for inflation protection is I-bonds. These are issued by the U.S. Treasury and offer a composite interest rate that includes both a fixed interest rate and a variable inflation rate. What makes I-bonds particularly appealing is that they are available in smaller denominations, starting at just $25. This makes them more accessible to a wider range of investors, even those with smaller portfolios. Like TIPS, I-bonds adjust to keep pace with inflation, ensuring that your principal is protected from losing value over time. Both TIPS and I-bonds are relatively safe, low-risk investments backed by the U.S. government. While they may not offer the same high returns as stocks, they provide a level of security during periods of inflation. By including these inflation-protected securities in your portfolio, you're safeguarding your wealth against inflation's harmful effects, ensuring that your investments maintain their value as the cost of living rises. 4. Leverage real estate and REITs. Real estate has long been a trusted investment for building long-term wealth, and it remains a powerful hedge against inflation as the cost of living increases. So do property values and rental rates. Real estate tends to appreciate over time, even in periods of inflation, which is why it's often viewed as a safe investment. The real estate market has proven to provide consistent returns, especially when the economy faces rising inflation. For those who may not have the capital or interest in managing properties directly, real estate investment trusts REITs are a great alternative. REITs allow you to invest in real estate portfolios that include commercial, residential, and industrial properties. These investments offer dividends, making them a great source of passive income, and they allow you to benefit from the growth in property values and rents without the hassle of managing physical properties. Real estate also has an advantage during inflation because it's often tied to fixed-rate mortgages. In an inflationary environment, paying off a fixed-rate mortgage becomes easier over time as the value of the money you owe decreases. If the property value appreciates, you're left with a growing asset that generates passive income. Real estate is a long-term strategy that can protect your wealth while providing regular income, making it an essential component of your inflation protection plan. 5. Automate and upskill your income. While managing your money and protecting your assets is important, it's equally crucial to focus on growing your income. In a world where inflation is a constant threat, your income needs to keep up. One way to ensure this is by automating your savings and investments. By setting up automated transfers into retirement accounts or investment portfolios, you make saving a regular part of your financial routine without relying on willpower. Automation helps you invest consistently, even when you might be tempted to spend the money elsewhere. But automation isn't the only way to protect your wealth. Upskilling is a powerful strategy that can help you boost your earning potential. In today's economy, your skills are an asset, and the more you invest in them, the more you can increase your income. Whether it's learning new technologies, improving your leadership skills, or gaining expertise in high-demand fields like coding or data analysis, upskilling makes you more valuable to employers and clients alike. As your earning power increases, you'll be able to outpace inflation and ensure that your lifestyle isn't limited by rising prices. Additionally, by diversifying your income streams, you're protecting yourself from economic fluctuations. It's not enough to rely on one job or one source of income. Consider creating side hustles, investing in stocks, or developing passive income streams through real estate or online businesses. The more income streams you have, the better positioned you are to weather inflationary periods and economic downturns. By focusing on income growth and automation, you can secure a prosperous future, no matter what inflation throws your way. In today's video, we've covered 5 smart strategies to protect your money from inflation. By investing in real assets like gold and commodities, focusing on price-resistant sectors, utilizing inflation-protected securities, leveraging real estate, and automating your income, you can ensure that your wealth stays protected during times of rising prices. Inflation is inevitable, but your response to it doesn't have to be reactive. By making proactive decisions and setting up smart financial systems, you can safeguard your financial future and build wealth that outpaces inflation. Thanks for watching, and if you found these strategies helpful, don't forget to like, share, and subscribe for more content on how to protect and grow your wealth. See you in the next video.